Welcome to the 15th episode of Tokenizing Everything, our weekly interview series with thought leaders in the blockchain industry. Today's guest is Alireza Siadat, partner at law firm Annerton and DLT expert. Before we begin, I have to mention that all opinions are solely personal and do not reflect the opinion of Amazing Blocks, Annerton, or any other involved party. So, welcome Alireza. How are you? Pleasure to have you.
Hi, Nicolas. It's my pleasure to be here and talking to you on this topic. And I'm very much looking forward for the discussion.
Me as well, and I think as the legal side of tokenization is always kind of what amazing blocks what at amazing blocks at least we get asked the most, even though we're more from the technical side. It will be quite interesting to our listeners. So maybe would you like to briefly start by giving an intro about yourself, kind of your career in the legal field, and why you kind of joined the blockchain space.
Sure, I will try to keep it short. So anyone who's interested in my bio, just check me out on LinkedIn or check our webpage, endorse.com. So I'm a German-based lawyer active in regulatory and looking into the blockchain and DLT topic already since 2014. So this is probably something very interesting to you guys because most of those who are into blockchain and crypto started recently, but I did it already in 2014 when the German regulator started warning investors who invested in Bitcoin at that time. At the same time, the Financial Action Task Force, the FATF, was looking into that. And that was a time when I was saying, okay, this is very interesting to see from a regulatory perspective. So this is what I did from that time, and I continued doing that. And I'm now partner at the law firm Annerton. We are a small law firm, a boutique law firm, focusing on regulatory. So our clients are banks, fintechs, investment firms, and all others in a let's say in a financial services industry. And one of my expert fields is blockchain and DLT. And besides working at the law firm on that topic, I'm also active in associations such as the German Blockchain Association. I founded and I'm board member of the Luxembourg-based Think Block Tank, which is also focusing on the regulation of token. And I'm also active in the blockchain association of the European Commission called INATBA, where we look at the regulation of European, from European perspective, such as the MiCA. So I'm very much looking forward, looking more into deep regulation of crypto tokenization and stuff like that, because this is also something where I advise mostly startups and others who try to tokenize actually everything. Yeah.
Yeah, that's a perfect last sentence there. This is also the name of the podcast, obviously. So thanks for the intro. Maybe before we dive into the topic, right, of the tokenization of everything, um, w- to me, what's interesting is what's initially had sparked your interest in law in general, right? Is there any specific moment that maybe led to that, or have you always known that you want to join this space? What was it for you?
I mean, yeah, law, legal. I mean, I do not want to make up a story which sounds very nice. I mean, it's obvious I want to become a lawyer to make lots of money, to earn lots of money. So this was somehow given to me by my parents, telling me, okay, you either become a doctor or you become a lawyer. There's nothing else because of my background. I'm Iranian by background, and all Iranians are looking into studying medicine or studying law. So this was my background. I mean, the reason why I started doing law after finishing school was because I wanted to do something new, something which is different from school. So a different topic, a different subject. Did not want to study mathematics or sport or anything which I did already before. I wanted to do something new. That's why I took law, and this actually also gives you a good understanding of my general interest. I want to do something new, something which is innovative, and this also is my daily work life.
Mm-hmm. Yeah, yeah. I mean, thanks, for not kind of creating a story like some people do. So I appreciate the degree of transparency. And maybe about the blockchain space. I mean, some people always like to describe like a special wow moment, kind of that led them to join this field. To me, was like kind of like the social impact that this technology can have, the decentralization. So what was it for you?
Yeah, I mean, as I said in the introduction, I was looking into that topic already in 2014 from a legal perspective because I heard that the German regulator BaFin was warning on investing in Bitcoin, and at that time, 2014, many didn't even know what is Bitcoin. Some knew it. Many people were laughing about it at that time. Bitcoin was around €1, so it was actually perfect timing to start investing in it. But for me, it was very interesting to see that we have some instrument, something which is not related to some intermediaries, which is really free, independent, and which goes globally. I mean, at that time, I was also into sharing music on Pirate Bay and other stuff, but the problem with Pirate Bay was the double spending problem. So you could use a music file and share it to 10 different people, even though you only have the right one time. And Bitcoin was the first use case which solved the double spending issue. And this was for me very interesting from a technical perspective and also for having transparency and trust, especially. This was for me actually the wow effect. It was not the what many people were thinking of making money with Bitcoin. For me, it was more the idea to say, okay, we really have something, a technological solution to overcome the double spending issue and to have trust without having intermediaries,
Mm-hmm.
without the need of intermediaries. So this was a wow effect for me.
Yeah, I mean that's a great point, and on the one hand, the challenge, right, of trying something new, and the innovative aspect of it. On the other hand, the trustless economy that this can create. So there may be a brief question about obviously one of the most important innovations are smart contracts, right? So how do you see the smart contracts affecting the legal system? Some say to a certain degree it will kind of jettison certain aspects that are currently present, and others say that there will be like a coexistence of both. And so what is your take on this? How will kind of the merge between tech and law through smart contracts happen?
Yeah. I mean, as you have heard it probably many times before, a smart contract is neither smart nor a contract by law. It is actually only an if-when definition. So if something happens, then the effect is going to be something. But I would still not say that it is not interesting to lawyers or to legal tech. In fact, it is very much because with a smart contract, that's probably also the reason why it is called smart contract. You can code, you can write down information, you can take those information and say, okay, this information is coming from A and from B, and then you have an agreement. And what you have an agreement, it is a contract. And so for a lawyer, I wouldn't say the work is disappearing. It is actually becoming more interesting and maybe even becoming more work, because now we have to provide our assistance and support to draft a smart contract, which will be effective also in front of the law or in front of the court. And this is very interesting. Therefore, I think a smart contract is something very genius-like and something we will use in the future, not just from a legal perspective, but in a whole, from a whole DeFi perspective, from a whole autonomous perspective. This is very important.
Yeah, I mean that's a great answer, and I think it's always it's interesting to hear that from you. That you're not like, oh, what is smart contracts, or let's forget it, right? But you're actually embracing it and kind of looking for the benefits and how you can work with this. So that's an interesting standpoint. So from something also that interests me, from like, as you obviously familiar with other lawyers and working at an innovative law firm such as Annerton, where you're a partner. What is the climate kind of in the industry currently? Are people embracing it, such as you guys do at Annerton, or are you really differentiating yourself from other law firms by actually having that hands-on and proactive approach for the emerging token economy?
Mm-hmm. I mean, the good thing for me is I was before that with big companies such as PricewaterhouseCoopers Legal, and I was advising also big firms who looked into the blockchain and crypto topic very early. So I was at that time when I was still with PwC, from 2017, we were working with other companies and with other people together from Singapore, Hong Kong, Switzerland. So where blockchain and crypto was already established way earlier than in Germany. The problem, I think, in Germany is the regulation, because everything is very, very strict and very tough. And this is also the reason why many companies and also law firms, even though they want to do something with crypto and blockchain or DLT, they're not sure if they're allowed to do so. And this is something we at Annerton, we take it differently because we are a smaller firm. We can do hands-on decisions. We're not bottlenecked by a big company, by a big group. So we are partners, individuals who decide very straightforward if we want to do it or we do not want to do it. That's why we can go with the innovation. We can be very flexible, and this gives us actually an advantage compared to bigger companies, bigger law firms, and makes us to accept or to be involved in even small projects with startups, where maybe a big law firm would say the risk is too high and the profit is too low. For us, we do not see it like this. We look at the interesting part of it and we say, is it interesting to us? And then we do it. We do not really have to make the comparison or the balancing between risk and profit. Yeah.
Mm-hmm. Yeah, yeah. No, I think that's a great point. You know, you're much more dynamic, probably also than larger entities, and so yeah, you all working together, you know, for this joint goal of kind of creating like a more innovative future, you know, for the legal system. Because I mean, blockchain can disrupt any sector, right? And you know, you guys have a great approach in terms of embracing it and rather than just being against it. So really props to you guys at this stage. Also, since you mentioned the German regulation, maybe what's interesting, let's just dive into that real quick, is that Germany is actually now looking into proposing a bill for electronic securities on blockchain. So can you maybe share some insights on what is currently being discussed and what your take is on that?
Yeah. So Germany started putting regulation on DLT, crypto, blockchain, already with the implementation of the Anti-Money Laundering Directive 5, when in the beginning of 2020, Germany regulated crypto custody services and also regulated crypto assets as a financial instrument within the German Banking Act. This was the first step from a regulatory perspective. The second step is following now. So from a civil law perspective, what we have in Germany is the limitation of doing transactions paperless, which means if you do a transaction with securities, by law, we would need the paper, we would need a deed. We cannot say we do it without. That is not working in Germany, given by the law that we would need to have a deed. Therefore, you could do it on a blockchain, but you would need to do it in parallel also on paper, which doesn't make any sense. Therefore, the German lawmaker has seen that, and in accordance with the German blockchain strategy, which is a strategy by the German government to be more attractive to the European and also the global financial services market and the blockchain market, to have this limitation taken away and given to the industry the possibility to trade securities purely electronic, also on a DLT, on a blockchain, without the need of a deed. And therefore, this law, this new law which is coming, which is the introduction law of electronic securities, is going to change existing civil law, a little bit also going to adopt regulatory law, but most important for anyone listening, this law is going to be most likely to be already effective from this year, in the middle of this year. And from that time, anyone interested in bearer bonds, trading bearer bonds, because this is the first instrument which is going to be allowed to be on the blockchain, can do that without the need of having a paper or deed.
Yeah, and I think that's you know, at least a major first step into the right direction, right? That we can have, you know, kind of jettison this paper-based system, like, and also kind of having the need for these, you know, parallel ecosystems basically, like that are currently, you know, needed, you know, to comply with the laws. Do you personally think, and obviously you cannot give a definite answer to this, you know, we will kind of see also, or when do you expect, you know, the next step in terms of shares, for instance, like it is the case with Liechtenstein, where you can tokenize equity? When do you see this happening in Germany? Like, what is your take on that?
Yeah, I mean, that's a good point. I mean, so for those who are very much into the topic, they already understood that bearer bonds is a debt instrument.
Mm.
So Germany is now starting with a debt instrument to put it on the blockchain or to put it fully electronic. But what is not covered is equity instruments, such as a share of a listed company, for instance, but also tokenization of really like property, like art, like real estate, like everything which is movable or immovable goods. This is so far not possible by this law, which is going to come, because at the first step, the German law is trying to put on the blockchain, on the DLT, instruments which are easy to adopt, such as bearer bonds. Equity instruments would be the next step. Mm, And I believe this will take some time, because the German law for stock corporations is a very traditional law. It's a very complex law, and you cannot just change it or adopt it by introducing a new law. For that, you would need to do much more. And therefore, I believe this will take at least 1 more year. So
Mhm.
next year we can talk about it to see how it works. But this year we can be happy to have in Germany bearer bonds on the blockchain.
Mm-hmm. Mm-hmm. Interesting. Yeah, that as at least a good outlook in terms of the future and the next steps that will happen. So from your experience, do you already see that there's that you guys get approached in terms of like is there interest already in terms of tokenizing, for instance, bearer bonds in Germany? And can you share some insights? Maybe not about obviously projects, as there's I'm sure NDAs in place and such, but maybe some where is there already interest coming from the industry?
Yes, there is interest coming. I mean, the approach the German lawmaker did was to look at the market and to look at what is the biggest interest at the moment. And as a German market is a market with many mid-sized companies, small and mid-sized companies, which we call in Germany KMU companies. And such companies, they usually issue bearer bonds in a traditional way. So what the German lawmaker did was counting one and one together, saying, okay, innovation, blockchain is something very hip, very on vogue right now. Plus, the traditional issuing of bearer bonds is something which the German market needs. So they put it together. And so from that perspective, saying that we will definitely see that. What we did not really touch on, what is also interesting, is the tokenization of fund shares, because this is something which the lawmaker did not really look at when screening the market. But once the lawmaker said, okay, we looked at the small and the mid-sized companies and we think that bearer bonds are very attractive and very much needed, the association, the German Association for the Asset Managers, raised their hands and said, okay, guys, you're just looking at the past, look at right now and the future. And we believe that the future is going to be the fund industry. And why putting only bearer bonds on the blockchain? We can also put on fund shares on the blockchain, which is very much similar. And the lawmaker actually listened to their suggestion and has put in a most recent updated draft of that law also that an explanation saying you can also tokenize, or you can also have electronic fund shares on the blockchain.
Okay, that's a very interesting, topic, and I think then we already kind of go into that direction, and my understanding is to give that 1 year outlook with tokenizing equity of companies and these alternative assets, where that's already kind of going into that direction at least, right? And can kind of make the entire fund world, so to say, much more efficient and bypassing intermediaries and such. So since we've kind of talked about a couple of use cases for tokenization already, one thing I would like to ask you, what do you see as to you personally, maybe the most interesting use case for tokenization, and on top of this, maybe the most feasible? I mean, sure, debt is obviously feasible, but maybe in terms of the equity part of it, what is to you the
Mm,
most feasible and
mm,
interesting use case?
mm. Yeah, so what we had a lot in the past was the in the STO world was tokenization of debt instruments, but debt instruments are a very risky instruments, and I would say for investors not really attractive, because in case of insolvency you usually are in the end on the line, in the end of the line. So it means once your debtor, once the issuer becomes insolvent, then you will only get your claims paid out in the end. And therefore, it is not really from an economic perspective an interesting investment. And so from that perspective, from the investor perspective, but also from the issuer perspective, I believe that tokenization of good is very attractive. And when I say good, I mean movable and immovable goods. You mostly think of property like houses, ground, but this we have already a lot. I think what is very much interesting is tokenization of old timers,
Mm,
tokenization of art,
mhm,
tokenization of, let's say, sneakers, watches, luxury goods.
mhm,
This is what gives the small investors a mix in their portfolio. They can choose in what to invest. And if you look at, for example, at the market for sneakers, you have an increase in a sneaker value in 1 year by sometimes 300, 600%. Something like this you cannot find in a classical investment. You have to look really very hard for that.
mm,
And if you then look at this tokenization of everything, so you have one issue who's tokenizing, let's say, watches, sneakers, old timers. So you can then go with small investments in this kind of products and have your portfolio diversified, and at the same time trying to reach or to gain the biggest reach. Yeah,
mhm.
and this is very interesting.
Yeah, I think it's this whole industry kind of morphing inaccessible and illiquid assets into assets that can be traded 24/7 in real time, and especially also can be fractionalized, right? The ownership, especially when talking about art pieces, usually it's solely high net worth individuals that own, art. But I mean, art is a cultural thing. It's for the public, and through this, you can actually offer this to the public as well. So that's a great point there. So from a regulatory side, before the tokenization of everything can happen, where do you see kind of the concerns, from a regulatory side, before they will implement these laws, and or they want to deal with in the respective laws they kind of draft?
Yeah, I mean the concerns we have with tokenizing everything is to not being sure how the civil law plays a role here. For instance, tokenizing something which is in a register like a property or a car, you could take the register and tokenize the register. This is simple because you have a standard. You know what to tokenize and what it is in the end. Tokenizing a watch or a sneaker or an old timer becomes tricky because you're not tokenizing the whole thing, you're tokenizing fraction, so small pieces of it. And this is something very difficult. So this is also for lawyers difficult to do it, because not just the tokenizing it, but later on trading it, the secondary market, and also what happens if the whole investment goes wrong, how to deal with that. This is very complex, and this is also the reason why in Germany we're not having it. I mean, maybe Germany is too complex with its laws. Maybe the country is too big. You should look most likely to smaller countries such as Liechtenstein or Switzerland or maybe Luxembourg, where this could work easier.
Mm-hmm, mm-hmm. And what can, maybe, since you mentioned the countries, Germany, learn from jurisdictions such as Liechtenstein, Switzerland, and Luxembourg?
I mean, learn, I would say, would maybe not be right to say. It would be not respectful enough towards the German market and towards Germany as it is, because Germany is one of the biggest population, has one of the biggest population within the European Union, and therefore has long tradition, has very complex laws which come from the history, and which doesn't make it easy for them to say, okay, why are you not doing it like Switzerland or
Mhm,
Liechtenstein or Luxembourg? Then the answer would be quite clear to say, yeah, these are small countries with not that much history as we have and with less complex laws.
mhm,
But I believe what they still could do to benefit from what other countries did before us, such as Liechtenstein did, to see how they did it, the technical perspective, how they did it. For instance, in Liechtenstein, to have the physical validator, this
mhm,
is a very interesting point. Or also in Switzerland, how they're dealing with that, not just with the law, but also their hands-on approach. Like the Swiss regulator, FINMA, was the first regulator which took the classification of token, utility, payment, and security token, and said, I'm going to share this with startups so they understand what it is, and I'm going to tell the startups how to deal with it from the regulatory perspective. This is something I would say the German regulator BaFin looked at and learned from it and tried to do the same. And we can do the same with drafting our laws, trying to just being a little bit more hands-on and move faster with the innovation, with the time. And this could be something what we could learn from the others.
Yeah, I think it's great also that you mentioned the physical validator, especially when we address, the retail market, right? So I mean, currently, just from our experience, the interest is still more from the private sector, even when in regards to tokenizing, these rare art pieces and such, because it's just at such an early stage. But in the future, especially, the role of the physical validator will be crucial, right? To validate, that this good is real, right? That it is actually placed where it's promised and such, and these other factors. So since we're talking about the retail sector now, can you maybe guide us through what needs to happen? So, because that's also an article that we both have written on that will be released in the future. So, anybody listening or watching, watch out for that article that will be released about the passporting of securities from jurisdiction, or tokenized securities from a jurisdiction such as Liechtenstein to the EU, or to jurisdictions such as Germany, for instance. So, can you maybe provide some insights of the life cycle basically that needs to happen in terms of the entire passporting process?
Yeah, I mean, the passporting process itself is only the last step
Mm-hmm.
of having a legal or regulatory compliant way of distributing your securities within the European Union. Before that, and taking like the case of Liechtenstein, before that, a couple of other things have to happen. For instance, first of all, you need to tokenize the goods. This is something which is you have to distinguish from the passporting. The passporting comes later. So you take, for example, let's say you take a property like a real estate property, and you want to tokenize it. So this is something which is in a register, and according to the Liechtenstein law, to the TVTG, you're allowed to tokenize it. So you take it, you show it maybe to the physical validator, which approves and says, yeah, this property really exists, and the amount of shares you have divided it into is correct. And then you put the rights to the property on the blockchain. Normally, you would put it on a piece of paper and write on the paper, whoever holds this paper, whoever is the holder of this paper is the holder of the right to this share, or to this part of the property. And you do it by putting it on the blockchain and tokenizing the right, actually, and giving the token to the new token holder, and say, okay, whoever is the holder of this token holds the right. And now the interesting part comes. The token itself, which is most likely then a security token because it gives you rights similar to like a security. This security token is, from a legal perspective, seen also as a classical security, as a security which we would have maybe in the MiFID, so in the Markets and Financial Industries Directive. And this security, you would need to notify with the regulator. In Liechtenstein, is the financial market regulator, the FMA. You notify it with them, and they would agree to what you did. They would say, okay, this is fine. This is from our perspective security. You do it with a prospectus, or you do it with some other documentation. This prospectus then shows that your right, which you have tokenized, is valid. Yeah, and then you take it with the same regulator, in this case at the FMA, and you ask them to have it passported to other countries, to other jurisdictions within the European Economic Area. And once the Liechtenstein regulator accepts it, yeah, with the same process, then you're allowed to take your securities, like your STOs, and distribute it within the European Union without the need to go again to the regulator, let's say in Germany or in Luxembourg or Netherlands, and do the whole process again. You do the process once, and then that's why it's called a passport. It's similar to a passport which an individual holds, and with this passport you're allowed to travel, or you're allowed to you distribute, market your product, which is the STO or the token, to the entire European Union.
Mm-hmm. Yeah, I mean, thanks for this detailed process. I think a lot of people will take definitely learning from that. And I mean, I would just advise anybody, if they are in need of passporting, to kind of get back to you about this, since you really seem like an expert in that field. Here at this stage, I would like to just briefly ask a question that was asked from the Be in Crypto community about the passporting aspect. Since tokenization allows kind of a peer-to-peer based system, and obviously just from a technical perspective, you could just send these tokens to any jurisdiction without passporting it, right? Obviously that wouldn't be legal, but you still could do it technically. So there, the question they ask is, does in the future tokenization potentially make passporting obsolete, or what is your take on that?
Yeah. I mean, this is a good question, and it continues what I just was talking about. Therefore, I would like to make it more clear. Passporting and tokenizing, they fit together, but they're not the same.
Mm,
So passporting is from a regulatory perspective, the law or the right which gives you the opportunity to distribute your product within the European Union without the requirement to get a license or get permission from each jurisdiction. So this is something which gives you comfort. Um, the tokenizing something is something which happens before. So you tokenize a product which is newly illiquid. So you cannot move it that easily. So you tokenize it so you can trade it. Let's say on a secondary market, you can trade it. So tokenizing is not making the passporting obsolete. Um, you, but of course you could, as it's P2P, you could, once you have tokenized the product, take your smartphone, take your computer, and just trade your instrument. For that, you do not need a passport. But if you want to do it in a regulatory compliant way, especially within the European Union, and you have once a security token, which is a security by law, by regulatory law, then you would need to do this passporting in order to be compliant.
mm-hmm. Yeah, I mean, I think that gave a brief overview, or a good overview to the community, to kind of why passporting doesn't make it obsolete, but it's kind of like they complement each other, right? And maybe there will be kind of innovations in the future that kind of align them even more in the future or so. But I'm sure till then, that we still need to go through that process. So as we're kind of coming to the end, there's one question I always ask my guests. It's about, like, where do you see blockchain and tokenization in 10 years? And obviously you cannot give a definite answer to this. No one can, but maybe can you share your insights on this question, and where you see the entire space moving in 10 years from now?
Um, yeah, I would say in 10 years, we will be at a point where we will have different products which are on the blockchain. We will have on one hand everything which is tokenized. So we will definitely have not just goods and debt instruments tokenized, but everything you can think of is going to be tokenized, because tokenization is in the end only putting a piece of information on the blockchain, which is recorded, which is kept on the blockchain, which is very safe and trustful, and therefore you can tokenize actually everything, like every kind of information. In the future you can put history books on the blockchain, and let's say in 2000 year no one has to question anymore the history book and say, is this information which is in this book true, or was the, let's say, the war or whatever happened in 2020 maybe differently? No, it is on the blockchain. It is a piece of information where everyone can rely on, trust on, and therefore I believe also in a global and international complex, this tokenizing everything will become more important for tokenizing information. And on the second hand, uh, besides tokenizing everything, I think that also the perspective of having stuff in a digital format, like digital currency, is going to be very important. Digital currency will go hand in hand with digital identity, and this will make the whole DeFi space more and more attractive in the next couple of years. I do not think it will take 10 years. I think it will take 5 years, maybe 8 years. Let's say we have in